March Madness. Think of it that way. 10:13 a.m. Pacific Standard Time on 3/23 of calendar 2014. So what we have is an S&P 500 chart for the calendar year. Yes, it's going to be this part of the trading will start on the 20. Tomorrow will be the 24th, and we're going to go right through Friday. And the last day of the trading month is March 31. And basically, what we're looking at here is a daily chart of this S&P. And as we started the year out, we came all the way down to 1737 here, and we popped all the way back up, made higher highs in over here. And now that we're going to be going into the calendar April month, where the stock market earnings are going to be reported once again, is that the volatility will continue to increase. From Friday monthly and triple witch options expiration, that means that in the very, very short term, that the calls in various different stocks that we do are at their lows. And so therefore, we're going to be concentrating on that side of the market. Even though that the S&P is overbought, it really doesn't matter. But on an individual stock basis, that we're going to be picking off the ones that got oversold on Friday, and we have a list of them. We'll talk about them later. What we will talk about once again, though, is how we are going to trade the April contract on the S&P 500 index, and we also are going to be looking at the May monthly now, April monthly and May monthly, the inline month and the outline month, meaning that April is the inside month. And it was, as we did that triple witch and we did all of that, now we're going to focus in here again, focusing directly on that S&P and whatnot at these various strike prices that we've done. One thing that we can say, there has not been a lot of conviction, and I'm going to show that this is just a daily where we can see where we're at here. And I can say that I'll blow it up. We know what that is. I'm going to say, hey, let's take a look at this cycle right here. Okay? This 4-day consolidation is narrow range, and we have a declining 10-minute about to cross over the 20. That would mean that the wall of resistance that we were at over here, the same area, narrow range, the buyers were not committed at this level because they were not. And that we've hit that same resistance level and the buyers remain not committed. Now we do know the last trading week of March is portfolio dressing. That's where fund managers are adding to positions or selling positions. It's called cost averaging in various different individual equities that trade in the S&P. Now, having said that, we're going to do the following. A quick snapshot of the 60-minute chart on the S&P 500. 60-minute daily chart. Look, we all know that we were down here, and this is where the rally started for the bull. And we've been up here on a 60-minute level, and we just can't seem to break those tops on heavy volume. It needs to be done on heavy volume with the various 10 sectors in the S&P 500. Right now, we're at this very same top across here on 3.6, on 3.11, and once again, this particular 60-minute on Friday monthly and triple witch options expiration, that the 60-minute distribution happened in that S&P 500. So when we open up tomorrow, we're going to be taking a look at why the S&P is a put buyer or a short seller on it, is because we cannot break those highs. And the high, just so people know, once again, is the following. This particular 60-minute high was 1883. But let me tell you something. That's 1883, and that date was 3/21. Now watch the following. Now, on the daily chart that we want to focus on is that we had a nice little rally up here, and guess what? That 52-week high on this S&P happened on 3/7 of 14, 1883.57 pennies, 1883. Then from 1883, we hit a short-term low on 3/14, which was 1839 on a 60. And now, check it out, on this daily, is we're right back at that wall of that 52-week high at 1883 here on the daily S&P 500. Now, let us understand that that was a wall of resistance. And what ended up happening is they took a distribution, and the broader S&P 500 sectors in the 500 stocks were selling off. They could not break that 52-week high. Rather, that has been now a double top wall of resistance, and once again, we are going to look for the very best trade. These contracts are going to pay a fortune on the S&P 500. And we've got the April and we have the May. And we know beyond a reasonable doubt by looking at the open interest, you got historical volume and open interest. We're going to get wholesale and we're going to do several trades. And our profit objective is $15,000 on both a call side, yes, on that put side. Right now that put side is favorable. Stay tuned as we make the big money on that S&P 500.